In a note to clients yesterday, J.P. Morgan strategist Marko Kolanovic says the S&P 500 will likely end the year unchanged as investors have already, quote, absorbed and priced in aggressive policy changes from the Federal Reserve. Kolanovic adding, quote, we remain positive on risky assets due to near record low positioning, bear sentiment, and our view that there will be no recession given supports from U.S. consumers, global post-COVID reopenings, and China's stimulus and recovery. Kolanovic comments come in the face of contradicting comments from his own CEO, Jamie Dimon, that investors should brace themselves for an economic hurricane. So joining me now on this debate is Victoria Fernandez, Chief Market Strategist at Crossmark Global Investments. Victoria, who's got it right? Is it Jamie Dimon saying that the economic hurricane is on the horizon, or is it Marko Kolanovic who says, hey, things are generally pretty good?
Hey, Dom, well, look, I never want to go against Jamie Dimon when it comes to these things, but I do think Marko is probably a little bit more, we're more in his camp than we are in Jamie Dimon's at this point. I don't deny that we've got a lot of volatility coming, and we know that's going to be there because you talked about it earlier in the show. There is so much uncertainty right now in regards to exactly what the Fed path is going to be. Are we going to get a soft landing? What are earnings going to look like? But at the same time, you're looking at an economy that has a really strong labor market. Household balance sheets look good. Corporate balance sheets, even though we've seen margin compression, corporate balance sheets still look good as well. You typically don't have a recession when these factors are in play. So we don't see a recession, just like Marko said, in 2022. Second half of next year, as some of these changes from the Fed start to work their way through the economy with a lag, perhaps that's more of a probability. But right now, we think we see more volatility, perhaps a little slowdown, but not a recession.
So if that's the case, if it's a slowdown, some volatility, does that mean that folks should still be out there buying dips in this market?
So we do like looking at opportunities when we see them in the market. And we're not saying every time there's a pullback, go all in, but we do think you need to be opportunistic in this market. Find names within the sectors that have pulled back, that have strong balance sheets, that have quality earnings. That's what we're doing. We're picking up a few names here and there in different sectors. I think that's the way you want to manage your portfolio. We're still fully invested. We had a client call yesterday and everyone said, what do we do with cash? We think you use these opportunities to go in and spend a little bit of your cash.
All right. So, you're kind of leading me into this next question, and you're setting me up, right? So what's on the shopping list? What are those stocks that fit all those criteria you just mentioned?
Yeah, so some of them, C.H. Robinson, for one, when you look at the transportation company, obviously with supply chain issues, that's been a name that we've really liked. They see continued margin expansion in their largest sector, which is ground transportation and trucking. So we like that name. You look at a name like CVS, a lot of people thought of it as kind of a COVID play with more people going there for COVID reasons, but they had growth across all their sectors. They're beating their industry peers. You've got a dividend, a little bit over 2% on a dividend. They've got buybacks coming. They raised that dividend. So I think, again, strong names there. And you know we like financials, but if you don't want to look at banks, look at a name like MetLife. It's a name that we've added to recently. Again, they've got strong balance sheets. The cash flow at MetLife is really good. A lot of that having to do with the Versant Health. They're now the third largest vision care provider, and that's a very capital light business. So cash flow is looking good there. That should help in volatile markets.